We have seen really EM stocks, though, stuck in a rut. Of course, we have seen rising yields, a stronger dollar. So when can we see this turning point, and why do you expect this to happen?
I do think we're coming up on a turning point here, and it's worth noting that it was a particularly difficult first quarter for emerging market assets. We came into this year with all this optimism about the reflation trade and global growth improving and thinking that would benefit emerging markets. And I think that thesis is still broadly intact. The reflation trade momentum, particularly in emerging markets, just got postponed until the second quarter. So we are still looking at an environment where a lot of the issues that plagued emerging markets in the first quarter, including rising U.S. yields, idiosyncratic issues like Turkey, and unfortunately still COVID being a really bad reality in many countries, are all looking like those are things that are going to get better as we move forward. So certainly U.S. yields appear to be slightly more trapped in a range from now on as a lot of the good news in the U.S. recovery is priced. COVID cases are hopefully set to drop, particularly as vaccination campaigns really pick up momentum in a lot of the emerging market countries. And then also the idiosyncratic issues like Turkey have proved to be mostly just a temporary blip on emerging markets rather than a more systemic issue.
Where are you seeing the opportunities? Because when we talk about emerging markets, it's such a broad sphere, right? And we have seen really a lot of strength with, say, the Chilean peso, because they've been really ahead of the curve when it comes to vaccinations. But that's not been the case with the rest of the developing nations.
Yeah, and it is important to make those regional distinctions and country distinctions in particular. Where we're focused in the immediate next quarter is really going to be on the countries that have the biggest exposure to the U.S. So given the likes of Mexico really come to mind, where exports to the U.S. make up around 70% of their total exports. And really seeing how that positive U.S. economic data is going to flow through to these countries first. India also stands out as having a pretty close connection to U.S. exports as well. The second step after that will be the broader global growth recovery. And so hopefully this upcoming quarter is one where the recovery is less concentrated in the United States itself and becomes more broad-based. I'm particularly looking for Europe to stage a little bit of a catch-up here and start to have some of that momentum going for it. That will continue to benefit global growth, which will have broadly positive implications for emerging markets more broadly.
How does the dollar then really play into this in terms of volatility? What's your gauge, or what's your best sort of assumption of what the greenback does and how that plays out across the EM complex? And also, I should say, how the yuan price action that we've been seeing is weighed there as well.
Yeah, so starting with the dollar, it's been a tough call for the first quarter, but we are still sticking with the more bearish dollar call in the medium term. I think this move that we saw in the last few months was short term in nature and was primarily predicated on this U.S. exceptionalism story, where you had a combination of a really significant repricing of growth expectations that happened between January and March. As investors started to anticipate this better growth outcome and this better outcome that could potentially end up encouraging Fed pricing to reconsider further down the line. What we're ending up with now, though, is I think a lot of that good news is already in the price. The story is pretty well appreciated. We had a pretty good non-farm payrolls print last week, along with 2 record ISM prints, and the dollar hasn't moved that much as of late. It is seeming like most of that's in the price. So that does provide a huge tailwind for emerging markets, particularly on the currency side, since this has been a major pressure point that we've been watching. Now, when it comes to the renminbi, it's something certainly to watch, given that we are expecting that China is going to slowly start normalizing policy in the coming months to the next year. And so we don't expect as much outperformance there, but certainly there are plenty of other currencies within the EM FX space that are still relatively cheap versus where they've been historically.
Emily, do you still see catch-up opportunities in the European market if the vaccine rollout doesn't go as well as or as quickly as planned?
So certainly the vaccine rollout has been a big disappointment in Europe, and that is going to be a crucial part to pull together in order to start having this better global growth outlook come together. We are still confident that this has just been a postponement in the eventual rollout of the vaccine rather than a changing of the actual outcome. So at this point, we are feeling like the most pessimistic scenario is reflected in Europe. I mean, the IMF World Economic Forecast that came out yesterday, upgraded everywhere, of course, in terms of expectations for growth in 2021. But Europe had the smallest increase. And so it's worth noting that there is still a pretty pessimistic outlook on the euro that does have a lot of room for improvement if things start to surprise to the upside.